Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patron, Benobi1. Thank you for choosing to support the channel. I loved this question from FSDologist on Twitter. Spend $12,000 on FSD now or invest at Tesla at a discount. Which will be more valuable in 5 years? This is the question of the day for all of you. I will put my answer in the comments below. Here we have some comedy for the day. And look, I understand conspiracy theories can be fun and interesting, but this one just seems to be a little ridiculous. Apparently on social media, primarily Facebook and some places on Twitter, a lot of people are talking about how these higher gas prices are just a way for the government to force people into electric vehicles. And some of these posts have suggested that the government wants to push people to use EVs so they can shut down a driver's car at will. And here's the reason I'm sharing this. From an analysis by Signal Labs for the AP, mentions of electric cars have increased by 400% over the last 4 days across public social media accounts. This obviously a great thing for Tesla, and it may be showing up in orders as we have another rumor on that topic. This is being reported by Steven at Inside EVs saying, according to sources familiar with Tesla's orders, the US automaker is already experiencing a massive sales surge. The anonymous sources claim that the automaker is seeing a 100% increase in new orders in areas of the US most impacted by the rising gas prices. And before we move on to check this claim, I just want to be clear, I obviously don't think it's a conspiracy theory about the government trying to push up gas prices. Just look at the price of oil, look at what we're doing with Russian imports and obviously the Ukraine situation, and it's very clear that, in my opinion, there are explanations for what's going on with gas prices, not related to the government just doing it to get people in EVs. Hopefully that all goes without saying. So what's the best way to check these claims about this new surge in Tesla demand? Well, delivery dates. Right now for the Model Y long range, we're looking at September. If we compare that with the Wayback Machine from a few days ago, it was August. So we do now have a 1 month pushback. However, there were some other changes made as well. As you can see, the price of the Model Y was $58,990 for the long range and $63,990 for performance. And coming back to today, each have increased by $1,000. And there's a very interesting phenomenon taking place here. If you go back to the beginning of January 2021, remember the price for a long-range Model Y was actually $49,990. So today we're looking at a $10,000 increase. Doing the math, that's a 20% increase in just about 1 year for the Model Y. And for the performance variant, it's increased $5,000 since that time, or about 9%. Now doing that same analysis for the Model 3, looking at the performance variant first, estimated delivery of May. If we go back just a few days, it was indeed April, so we've seen increased wait times for the Model 3 performance. However, long range and standard range or rear wheel drive have stayed the same. And looking at the price increases, this is a few days ago, we were looking at 44 and change, 50 and 58. And fast forward to today, the only variant that has seen the $1,000 increase is the long range version. And per the usual, many people are speculating that, well, nickel prices are surging, so Tesla's obviously raising their prices because of what's going on with nickel. And initially it might make sense because you look at certain variants that use nickel in the batteries and the prices are increasing in all cases except the Model 3 Performance. That price has stayed the same. That does use the nickel-based batteries. However, I understand why people would assume that because the rear-wheel drive variant, which uses the LFP battery, did not get a price bump. However, I'm not sure it's true all the way across the board. And to be clear, prices have been raised in Europe and China as well. Just a reminder, there are myriad reasons why Tesla would do a price increase. Oftentimes it won't be just because of one supply chain resource. It could be supply and demand factors. It could be all of the supply chain logistics for the parts of the vehicle, not just one part of the battery. And what's that interesting phenomenon I was talking about? Well, to round it out with the Model 3, going back to January of 2021, standard range at that time cost 37 and change, long range 46, performance 54. Fast forward to today, you can see that all variants have increased in cost by between $5,000 and $7,000. And doing the calculation for the rear wheel drive, that's an 18% increase over the past 13 months. So what's happening is many Tesla owners who bought their vehicle last year are now seeing higher prices on the used market for what they actually paid for their vehicles due to the used vehicle demand and these new price raises for new vehicles. So Elon's actually ahead of his promise on this one that Teslas are indeed appreciating assets. at least for now. Last thing before we move on, Tesla has done something brilliant that should boost margins in the coming quarters. Right now, if you look at the Model Y long range estimated delivery of September. However, if you scroll down and add the FSD option and you click add for the FSD option, you can see estimated delivery changes from September to May, an entire 4 months sooner for those opting for the FSD package. So a new incentive to get people to pay the $12,000 for FSD upfront to get your car a few months sooner. And if you change the wheels to the base Aero wheels, which are not the default, and then you go from May all the way to December, a full 7 months sooner. Moving on, the CPI data came out this morning, basically a huge nothing burger coming in right in line with expectations. 0.8% in February month over month, and the headline 7.9% year over year, compared to the economists surveyed who are expecting 7.8% headline and 0.7% for the month. So you're going to see all kinds of headlines for the highest inflation in 40 years. However, remember, this is an expectation game, and when it comes in line with expectations, there's not going to be as significant of a move in the market. The one thing that I'll personally be watching in March is going to be the energy. As you can see, for February over January, we have significantly elevated levels of inflation, especially compared to the moves in January. To be expected, however, a bigger portion of the move in oil prices won't be absorbed or seen in prices until March, so we'll have to watch those numbers closely. And just a quick note, the 10-year treasury yield has gone over 2%. This is watched very closely by the market at scale. If you're not familiar, bond yields and bond prices move inversely. So if the yield is going up, that means the bond price is going down. Ordinarily, that's driven by demand. So if the demand is going down, that means less people are wanting these bonds, which are usually a safe haven. So ordinarily, that would mean investors are looking for more risk on assets. Typically, using that rule of thumb, in times like this, you would expect the stock market to be green. However, it's not. So just a reminder, there is never ever just one thing that's moving the market. There are plenty of things going into this. It is never as simple as analysts or especially YouTubers try to make it sound. Holmars asks for an FSD beta update for the next version, Elon says, this weekend. Just to make it official, the House did pass legislation banning Russian oil and gas imports by an overwhelming vote of 414 to 17. If you're wondering who voted no, here are a list of the names. This will now go to the Senate for approval. We got a new note from Piper Sandler, and I just want to highlight one thing. He said, "These figures are always topical, talking about delivery figures out of Shanghai, but we've also noticed a general uptick in inbound calls regarding Tesla's exposure to geopolitical risks and or commodity price spikes. Nickel prices are garnering particular attention, no surprise, given their importance in battery manufacturing, but in our view, deteriorating US-China relations are potentially more consequential in the long term. Tesla's China exposure is a major positive for Tesla and China, but we must admit, if American companies are eventually used as pawns in a wider geopolitical conflict, then Tesla shareholders would likely suffer." So obviously this isn't news. I just think every now and then it's good for us to bring up and discuss some of the risks that yes, even Tesla is going to face. And for me, on the concern spectrum, I am definitely on the less concerned side, as I think Tesla is essential to what China is trying to accomplish with the push to EVs and sustainable energy. China understands how valuable Tesla is and all of their technology and innovation, how important now Giga Shanghai is to their own local economy. So I think things would have to get really, really bad for Tesla to be negatively impacted in a way that would have a material implication on Giga Shanghai's output. The other bigger news item of the day has to do with the CEO of Lucid, Peter Rawlinson, selling some stock. Many people are panicking, wondering if they should sell their Lucid shares. Is Lucid going bankrupt? Does Peter not believe in the company anymore? Well, let's walk through this and go through, and in a few seconds, you'll understand what's really going on. So this should make it a lot easier to see given the Form 4s are so small. Before this transaction, Peter owned 30,159,000 shares of Lucid stock. He then sold 7,981,000 shares, combining these two transactions. That means, doing the math, he sold 26% of his stake in Lucid. If you do the math at the share price, which was about $22, that's $180.6 million worth of Lucid stock that Peter has sold. You'll understand the air quotes here momentarily. Now, if you go back to the document and actually scroll down and read the document, you will see some text in green. represent shares that have been withheld by the issuer to satisfy income tax withholding and remittance obligations in connection with the vesting of restricted stock units reported on Form 4 filed on July 27, 2021. Line 2 is exactly the same, except for restricted stock units, it says performance stock units. So Dylan, what are restricted stock units and performance stock units? Well, it's actually rather simple. It's just a form of compensation in the form of shares, typically for insiders or executives of a company. Restricted stock units are just that, restricted for a period of time, typically until those shares vest after X amount of time. Performance stock units, on the other hand, they're going to be restricted for a period of time, or if you meet a certain performance criteria, then those shares could vest a little bit sooner, hence the performance base. And this right here is very important to know. With restricted stock units, you pay income taxes when shares are delivered, usually at vesting. Some plans actually let you pay withholding taxes by surrendering an equivalent value of shares, which could very well be what's going on here with Peter Rawlinson. This share surrender, if you will, lets you avoid paying taxes in cash, essentially to use company shares instead of cash to meet these obligations. And going back to the Form 4 from today, what did it say? Represent shares that have been withheld by the issuer being Lucid. And here's the Form 4 that was referenced from July 24th, 2021 for Peter Rawlinson. We have the common stock up here being acquired, and then we have some stock options, the right to buy, with exercise prices of 18 cents, 37 cents, and 83 cents. And here we have footnotes 1 and 2. Remember, 1 is for the smaller lot of shares. 1 says, received in exchange for 203,000 shares of common stock of Ativa, basically shares Rawlinson got from the original merger. But 2 is more important, and what does 2 say? Represents restricted stock units received in exchange for 11.2 million RSUs of Lucid, once again in connection with the merger. And here you have it, 13.8 million of the RSUs are subject to a time vesting requirement and will vest in 16 equal quarterly installments beginning December 2021. And another 16 million of the RSUs are subject to a performance vesting requirement and will vest in 5 tranches based on the achievement of market capitalization goals. So to me, this is very simply just a tax liability situation, absolutely nothing for Lucid shareholders to worry or panic about. And yes, Warren did a video on this topic. However, Warren, if you happen to see this, nothing personal, but you didn't mention anything about the footnotes or the tax liability situation. And look, Lord knows we all make mistakes, myself included. However, if that was indeed an honest mistake, it may be worth correcting. And last up for today, Autoblog put together a list of the most efficient EVs for 2022 based on the miles per gallon equivalent. Looking at the top 10, no surprises, but Tesla has taken 2 of the top 3 slots with the Model 3 and Model Y. In between, you find the Lucid Air at 131 miles per gallon equivalent. And scrolling down to see the bottom part of the list, although all of these vehicles are still technically efficient relative to the competition, I just want to say one thing. I think too many people are being laser focused on efficiency for EVs. I understand it's a very important conversation topic, but when you think about gas cars in the long term, how many people are super laser focused on getting the very best miles per gallon? It's way more about the features and the comfort and the price and all of those other things. So yes, these metrics are important and something to consider. However, it shouldn't be the make or break for whether somebody decides to buy a vehicle or not, unless you have very specific range needs. That'll do it for today. Please like the video if you did. Hope you guys have a wonderful day, and a huge thank you to all of my Patreon supporters.